Did the Archegos blow up just create a killer Viacom buying opportunity? What's up, my Milk Money Millionaires? I'm Joshua. Welcome to my channel where we learn how to make our money, make more money. And one of my favorite ways of doing that is to buy good companies taken down in the short term by news or temporary shenanigans like an over-leveraged hedge fund totally getting blown up and liquidated out of a good stock. So is Viacom a good candidate for this strategy? That's what I'm going to get into in this video, and I'll probably make another video about Baidu, which has also been unfairly hammered right now. So be sure to like and subscribe to this channel to see that video as well. So in this video, I'm going to be talking about Viacom, what I think a fair price for it is, how I'm playing it, and what my sell price would be. But first, a reminder that I'm not a financial advisor, just an edutainment YouTuber, so invest at your own risk. And feel free to tell me what you think I got right or wrong in the comments below. So, what the heck just happened? Archego's, a family office, used some shenanigans to get several brokers to allow them to leverage up 5-to-1 and break the 10% rule with swaps, and got loaded to the gills with some hot stocks. And apparently one of the stocks they were loaded up with most was Viacom. When Viacom wobbled, Goldman Sachs saw the trouble brewing and started the first domino, forcing liquidation, and then the other prime brokers had to follow to cut their losses, and it took Viacom from its high of almost $100 down 55% to 45 on Monday. It is still unclear how all of this happened exactly, which is kind of scary because we don't know how many other funds or how many other banks are in over their heads with crazy 5x leverage traders. But in the short term, I think we can take advantage of a unique situation with Viacom. This all started when Viacom realized their stock was at a stupid valuation at $100 and decided to take advantage with a share offering. Maybe it was at 100 because people like Bill Hoang from Archegos kept buying it on margin and pumping the price. Who knows? They decided a huge stock offering was a good idea, and they netted almost $3 billion in stock sales, causing a dip in the Viacom stock, which triggered Goldman to realize they needed to cut their risk and start the liquidation process of Archegos. And other banks followed suit, causing Viacom stock to collapse. Could you imagine buying the offering at $100 and then wake up and see the stock blow up? Man, that really sucks. That's a good reminder why we need to be careful with any type of hyped or hot stocks. So what is Viacom anyway? They're a major media conglomerate that owns some major cable and network brands, as well as Paramount Studios, which is a big-time movie studio. They own CBS, CBS Sports, Comedy Central, MTV, BET, and Nickelodeon. And traditionally, they made all their money from ads on their network television, as well as affiliate links from cable subscriptions. They were hammered by COVID as ad spend totally collapsed, but they rebounded nicely this year. This business model worries me, however, as we move away from cable, but Paramount Plus may hopefully save the day as they move to a streaming model. And even better news, the $3 billion that they made from the stock offering last week is all going to go into content development. And in this space, content is king. Also, they still make a significant amount of revenue from CBS and CBS Sports, as there's still a large network TV audience that they dominate, even if that segment is slowly declining. The strong sports contracts is also a good sign, as that is the most profitable and safe segment of the live TV market. It's actually a bigger market than I expected. So really, as a long-term investment, I would be bearish about Viacom if it was just a legacy media business. So the key is their streaming success. And honestly, if they have strong enough content that they license to other streamers, that might be okay as well. But really having Paramount Plus do well is key to having growth and viability going forward. Honestly, I haven't heard any buzz about Paramount Plus personally, and I'm suspicious that consumers are less and less excited every time there's a new streaming offering to add to the pile of subscriptions they already have. But to be fair, I'm out of touch as I'm watching less and less TV myself, and I'm not even on social media anymore, so maybe everyone's raving about it and I just haven't heard. So I decided to check out Paramount Plus to see what it's all about, see what kind of content they have. I was excited about the prospect for awesome movies being attached to Paramount Plus, and being that Paramount Studios is a part of the brand. And on their welcome screen, they had two of my favorite movies in Tommy Boy and Italian Job. And I scrolled down to see The Godfather as well. So at first glance, I thought, great, killer content. But as I dug in more, there was not a lot of depth, with a few old classics mixed in with some second-rate movies and very little current stuff, which is kind of disappointing, being that they're from Paramount Studios. They had lots of documentaries as well, which I like, but they were very generic, like very basic nature and history documentaries, nothing really current or unique along the lines of like Blackfish or Super Size Me or something like that. The comedy segment as well had very little in the movie area, but they did have some decent stand-up titles. So the movie section overall left a little bit to be desired for me. But with such a big studio name behind it, you would think there would be room to improve pretty easily if they chose to, but maybe they're holding back those titles to sell for other subscription services. They did look a lot stronger when you got to the TV space though, as they own some quality brands in MTV, Comedy Central, etc. And of course, the big CBS. So if you like CBS shows or MTV, you might find content. Me personally, there's nothing for me on CBS. It's incredibly popular though, and they own some of the most popular shows on TV. So I do think there's a strong market there. Also, owning Nickelodeon is a great asset, as Paramount Plus can be a strong kids content platform, which parents love having stuff to stream for their kids. So at first glance, I don't see a sure thing home run like I saw with Disney Plus, but it does look like there's a lot of potential, and it might just be me and my taste. So I definitely want to keep an eye on their subscriber counts and see if they continue to climb, and maybe Paramount Plus would be a much better deal than they look right now. And also, if you are thinking of investing, I think doing a free trial of Paramount Plus to see if you catch yourself enjoying Paramount Plus streaming would be some worthwhile firsthand due diligence. So let's get a little bit into the valuation. When Viacom was at their inflated high of $100, they were at a 23 PE, and the market didn't seem to believe they were worth that, as analysts began downgrading them when they got to that price, especially with the big stock sale, and they sold off. However, big sell-offs are usually overreactive, so maybe it's got a higher valuation deserved than its current 10.8 PE, especially given its dividend yield breaking 2%. If, and a big if, we get Paramount Plus to do well, we could definitely see some strong PE expansion and a return to maybe those lofty levels of 75 to 100 again. Most analysts I looked at seem to think that Paramount was worth between $55 and $70, with slow 1 to 3% top line growth predictions. Morningstar analysts gave a fundamental fair value estimate at $57 with that slow growth target over the next few years. So if it grows slowly and it's still worth $57, then we definitely have an undervalued stock, which is undervalued by 20% and a screaming buy for at least a turnaround play. And there's a lottery ticket chance of it exceeding expectations as Paramount Plus surprises everyone and revenue growth takes off. Then we can get well above that fair value of 57 and increase that fair value price as well, right along with the price increase. So how am I playing it? Currently, it's a turnaround play for me, meaning I'm not buying it for a long-term hold, but to play the recovery and price action from this hopeful short-term volatility. I sold some puts to profit off the price volatility, and hopefully it will continue to bounce this week. And also, I picked up some regular shares in case it's already bottomed. My current plan is to hold until it returns to its fair value price of $57 to $60 and then sell covered calls aggressively or just sell from profit outright, as I'm not sold about having strong growth long term. Although I haven't totally written it off. In the meantime, I'm going to subscribe to see if I like Paramount Plus and keep my eye on its subscriber numbers. If CBS shows surprising fundamental growth, then maybe I'll hold a little longer to see if Viacom's got some legs as a strong media company of the future, instead of just being a titan of TV past. So what do you think? Do you think this Viacom is old news, or do you think Viacom is the future? Do you think that this correction is overstated? How are you playing it? Let me know in the comments below. Also, if you'd like to see the Baidu video coming soon, then definitely please like and subscribe. As always, I'm Joshua. I appreciate you watching and supporting the channel with those like buttons and subscriptions and shares and whatever else you can do to help that algorithm pump my channel. I appreciate it very much. And I can't wait to see you in the next video where we learn how to make our money, make more money. So peace.